Hey traders, in today's video, we're diving into the most critical aspect of trading that separates successful traders from those who blow up their accounts. No, it's not finding the perfect strategy or predicting the market's next move. It's risk management. If you want to protect your capital and trade with confidence, stick around because I'll also introduce you to my trading money management Excel sheet to help you implement these principles. The link to download it is in the description below. If you'd like to support my work and donate for the free Excel sheet, my PayPal and Bitcoin wallet address are also in the description. Let's get started. Determine your risk per trade. The first rule of risk management is to never risk too much on a single trade. A good rule of thumb is to risk only 1 to 2% of your account balance per trade. For example, if you have a $10,000 account, your maximum loss should be $100 to $200 per trade. This ensures that even after a string of losses, you'll still have enough capital to recover. Set stop loss and take profit levels. You must always trade with a plan. That means setting a stop loss to limit your downside and a take profit to lock in your gains. A great guideline is to use a risk to reward ratio of at least 1:2. For every $1 you risk, aim to make $2. This way, even if you win only half your trades, you'll still come out profitable. Position sizing. Position sizing ensures you're trading the correct number of lots or shares based on your risk tolerance. Here's a simple formula. Let's say you're risking $100 and your stop loss is 10 pips. You trade 1 mini lot 0.1 lots. This keeps your risk consistent and manageable. Use a trading plan. A trading plan is your blueprint for success. Define your entry, exit, and risk parameters before you even think about clicking that trade button. And most importantly, stick to the plan, no matter what your emotions tell you. Diversify and avoid over-leveraging. Don't put all your eggs in one basket. Diversify your trades and keep leverage low to protect yourself from market volatility. Over-leveraging is a quick way to lose your entire account. Know when to walk away. Set daily or weekly loss limits and stick to them. If you hit your limit, take a break. Revenge trading only leads to bigger losses. It's okay to step away and come back with a clear mind. Trade only high probability setups. Don't chase trades. Wait for clear signals and trade only when the odds are in your favor. Patience is a virtue in trading. Regularly review your performance. Keeping a trading journal is essential for long-term success. Analyze your trades to identify what's working and what needs improvement. This is where my trading money management Excel sheet comes in handy. It helps you track your trades, manage your risk, and optimize your position sizes. Risk management is the foundation of successful trading. By following these strategies and using tools like my trading money management Excel sheet, you can protect your account and grow your profits over time. The link to download the sheet is in the description below. If you'd like to support my work, feel free to donate via PayPal or Bitcoin. Details are also in the description. If you found this video helpful, don't forget to like, subscribe, and hit the notification bell. Let's trade smart and stay profitable. See you in the next video.